Hi fellow traders, I am making this video to give you a fresh analysis of pound as well as update on GBP CHF. So we got a bounce today in pound after release of positive data about the unemployment claims. Unemployment claims came way less than it was estimated, so it was a positive news. But if we compare this news with the previous news like negative CPI, negative retail sales, then this news is not as effective as those news. And market reaction also was more on those previous news than the reaction on this news. So if you want to understand what I mean, let's go to this 1 hour time frame. So this is the move caused by those previous data. So this is a move of 156.6 pips, and this is a faster move than the upward move, and this point was taken already out, and then bearish setup was confirmed. That is what I had said in previous analysis. We were waiting for upward retracement and then bearish candle pattern or something like that to enter sell. So I have already entered my sell position after formation of this shooting star, and this position has not been taken in GBPUSD. This time also I have chosen a different counter currency, and that is Japanese yen. So I have taken a sell position in GBP JPY. The reason behind this is recent comments from Bank of Japan Kuroda, who said that the economy is expanding moderately. So overall sentiment for Japanese yen recently is positive, and there is expectation that Japanese yen will correct against its recent losses. To understand its recent losses, let's go to daily time frame of this USD JPY. We do not have any index of Japanese yen, which is why we can look at the USD JPY, that is the major pair. So that was the movement to the upside. If we look at the recent environment, there are swings to the upside, downside, upside, downside. So after this upward swing, downside deeper retracement is possible. We do not require downside deeper retracement. Even if 30% retracement will be taking place, that will be enough for driving GBP JPY to the downside faster than GBP USD. That's why we have taken position in GBP JPY, and we have taken position in a split style. So one position was taken right after the shooting star formation on GBP USD, and second position is going to be taken when the price will fall below recent consolidation, because price has already come above and now it is somewhere around this area. So our entry point was something around here, so now the price is kind of 20 pips above, 22 pips above, and we are looking at the 5 minutes. As soon as the price breaks this consolidation on the 5 minutes to the downside, we will again enter the half of the position. So this is how we are entering sell. Partial sell has been taken, and this final position will be taken below this area. So this is the plan. Now let's talk about how to exit in case of loss and case of profit. So plan will remain simple. We will be looking at GBP USD and USD JPY. Once our target on GBP USD will be complete, we will exit this position, or else if USD JPY will retrace down to any significant level, maybe 30% or maybe 38.2% of daily upswing, and then if it will make any bullish pattern, then also we'll exit the position. So we'll exit the position whatever happens first. If GBPUSD completes the target first, exit the sell of GBP JPY, or if USD JPY retraces down and makes any bullish candle pattern on 4 hour time frame, we will ignore it 1 hour time frame candle. Then and if it happens first, we will exit the position. So this is the plan, and now let's talk about how to enter in case of loss. And that can be simply understood by looking at the GBPUSD, that is the major pair. And as I already have said, that the GBP is more driven by itself than its counter currency. So let's draw a recent trend line which was there on this 4-hour time frame. Market shouldn't go beyond this trend line. That should be the maximum allowed retracement. That is, but that will also not be really showing the strength of bears. Market should return before this, but this is the maximum retracement, and that this area will be the final hope for bears. Otherwise, if market goes beyond this trend line, then there is no hope for bears. Let me explain you why. Because market is already trading around a rising trend line on daily time frame. Look at this trend line. So if it goes up, then this will look like a morning star pattern. You see this bearish candle, this small hammer kind of candle, and today's bullish candle. So this will make a morning star pattern right at the daily rising trend line. Then most of the traders will believe on the pattern made on the daily time frame rather than the smaller time frame, which is why recent upward movements should stop somewhere around significant Fibonacci level, or it must stop at least after retracing to recent trend line. So let's make the trend line of daily time frame not visible here because it is making the chart looks little cluttery. All right, okay, so here we have this recent line, and market may touch here and come back. So but I'm not in favor of that much retracement should be even smaller if bears are really strong. So let me show you the maximum retracement, in my opinion, should not be more than 61.8%. But recent environment on GBPUSD is very contradictory. There are some positive fundamental factors, there are some negative fundamental factors, there are some bullish technical setup, there are some bearish technical setup. That's why we should be a little flexible in terms of our stop loss, and even if it doesn't return from 61.8% where it is right now, we should wait for a reaction around this trend line. And if it doesn't return even from the trend line, and if it closes above this trend line significantly, like 6-10 pips above this trend line, I mean closing means the 4-hour candle should close above this, then we should exit our sell position. So that's all about the GBP USD, GBP JPY, and USD JPY. If there is something you couldn't understand, you type in the comment. So that's all. Thank you for watching.